In today's video, we're going to be talking about three potential upside surprises for Tesla's Q3 earnings, which is this Wednesday, October 19th, after market close, that I think many analysts and retail investors are underestimating. And despite falling short of analysts' expectations on their Q3 deliveries, we have to remember that Tesla still had a record number of deliveries by 33,782 units, or about a 10.9% increase over their best quarter, which was Q1 2022. And so I think the delivery increase combined with some other factors is going to lead to a few upside surprises this quarter. And those three surprises are number one, an increase in average selling prices, which most people are accounting for, but I don't think they are to the degree that it's going to take place. Number two is an increase in non-automotive revenue and profit, specifically from things like energy, superchargers, and insurance, which have begun ramping over recent quarters. And then finally, we have commodity prices and other costs declining, and a lot of one-off expenses that have hurt previous quarters that shouldn't show up in this quarter. So let's dive into average selling prices first and tell you a little bit more about what I mean. And I want to start by heading over to Tesla's investor relations site, which if you ever want to go to it, it's ir.tesla.com. And on that site, you can see that Tesla has their quarterly reports listed nicely here, and anybody can just go and view and download them. So I'm going to pull up last quarter's report, which is going to give us some great data that we can use to make some projections for this quarter. And if you go to page 4 of what's provided here, you can see that Tesla has their financial data broken down for the quarter, which is here in that reddish column. And then they have previous quarters as well, which is really nice because we can see some of the change and growth from quarter to quarter. And so a lot of people will jump to this first line, which is the total revenue from automotives. And this is in millions. So you can see that back in quarter 2 of 2021, it was 10.2 billion in automotive revenue. And then in the Q2, in this red column, it was most recently 14.6 billion. And so we're going to use this number to figure out an average selling price, because the one thing that Tesla does not provide is an average selling price per vehicle. And while it's not going to be a perfect number, if we use the automotive total revenue here at 14.6 billion, we subtract regulatory credits, so we aren't factoring that in. And then we divide it by the total number of deliveries, which we have on a different page here. We can do some rough math to figure out an average selling price per vehicle. And so I have this summarized on another page to be able to see this in more of a snapshot and to be able to make some projections, which you'll see in that blue column there. And so if we look at Q2 deliveries, we have a total number of deliveries of 254,695. That was the quarter where we had the Shanghai shutdowns, and so we saw a pretty big drop in deliveries. But the one big positive that we see about last quarter is once we look at revenues and then remove that regulatory credits, which I did here, we get to 14.25 billion in automotive revenue. When we divide that by our total deliveries, we get an average selling price per vehicle of $55,981. And now I want you guys to look back at this math from previous quarters, and you can see how much Tesla's average selling price has steadily been climbing over the last 4 or 5 quarters. And so as I go to project for Q3, I'm projecting a pretty big increase on average selling price. And I'm going to dive into why I believe that that average selling price is going to jump up. And I think I might be potentially conservative on this. So first and foremost, let's go over the mix of S and X deliveries, which are the most expensive models by far that Tesla sells. And this quarter, we had 18,672 deliveries of Model S and X, which was a recent record. It wasn't their all-time best, but of any of the quarters here, it is by far the most that they've delivered. And then what I like to do is look at this as a percentage of total deliveries, because as deliveries grow, of course, Model S and Model X are going to grow with it. But what's really important when it comes to average selling prices is we want to see how many S and X deliveries as a percentage of total deliveries. And so last quarter, it was high at 6.35%, but that's because the Shanghai plant was shut down and all of the S and X are produced in Fremont, which was running the entire quarter. And so that percentage was kind of skewed high. But if we look at previous quarters, it has been more in that 3 to 4% range. And so at 5.43%, that's definitely on the higher side of that mix. And so that I think will definitely have a positive benefit on average selling price. The other thing that we've seen is prices have increased tremendously all through 2021, all through 2022. And we've had an order backlog that is starting to unwind, but a lot of those price increases have been hitting in current quarters or just recently. And that's where you see a lot of that steady climb in these most recent quarters. And I'm projecting that some of the price raises that happened between March and August of this year, which were dramatic price increases, are going to start to hit here. And let me show you what I mean. So this chart basically shows you the increase in prices that have happened from the beginning of January of 2022 all the way through to today, although that last column says August because there haven't been any price increases since August of this year. And most of the price increases happened between March and August. And so if we look at where the price was on March 9th, March 13th, before the first major price increase happened, and then we compare that to where those prices are today, you can see in this column here on the right side, the difference, the increase in price of each of these various models. And so most of these prices are increasing 6,000, 7,000, 10,000. We have the Model X dual motor all-wheel drive that increased 16,000 from the beginning of March 13th, 2022, all the way to August of 2022. And so a lot of those models are starting to hit, not all of them, some of them are still on backlog, but a lot of those models were ordered and delivered by Q3 of this year. And so down the right side here, I created a blended average for each model. So that way we can get a little bit of a summary of how much this increase has totaled up to. And we can see that the Model S has on average increased $8,000, Model X, $14,250, Model 3, $4,333, and then Model Y, $6,500. And we know the Model Y is definitely their best selling vehicle. And so as we go back to our financial summary and we look at my projection of an increase of less than $3,000 from $55,981 up to $58,168, it doesn't seem like a lot when you look at the price increases that have happened. And then before I get to how this affects the total gross revenue from automotive, there's one other thing that I think is going to positively affect average selling price, and that is FSD revenue. FSD revenue is one of the things that we don't have a ton of great data on, but we do have a general understanding that Tesla has not recognized all of their FSD revenue from prior years. And over time, they're able to recognize more of that revenue as they improve the software, and that software has more utility to the end consumer. The reason I think Tesla will be recognizing more in this quarter is a few things. Number one, we had a price raise from 12,000 to 15,000. That happened on September 5th. And I don't think we're going to see higher FSD recognition because of that 15,000 price that it increased to. I think we're going to see it because whenever there's a deadline for people to purchase at a lower price, it spurs on more purchases. And we've seen that in the past with previous charts where we've seen that percentage of FSD take rate declining quarter over quarter. But then whenever there's a price increase, we'll see it either level off or even potentially increase for that quarter. Also, we saw Tesla add back in the enhanced autopilot feature for $6,000. And so that's a smaller investment to the end consumer. It still has value in terms of making the car safer. But the cool thing about enhanced autopilot is, from what I've seen, I believe that they can recognize all 6,000 of that revenue because the software is doing exactly what it says it's supposed to do. It's not a beta like the FSD is. Because of that, even though it may seem like on paper it's handicapping the main $12,000, $15,000 full self-driving package, in this case, because they get to recognize most of it or all of it, I believe that that's going to have a positive impact on average selling prices and profitability right away. And then when it comes to the main FSD, we've seen them do this big rollout of 10.69 over the last quarter, and they've said that they've increased to 160,000 users or potentially more. That to me is a clear sign that the software is becoming more valuable, it's progressing, and there's an opportunity for them to recognize more of their revenue in Q3. To me, if all of these things are true, which we know the price raises are true, there have not been any price decreases in any markets, then the 58,168 per vehicle seems very conservative. And if that's the case, that actually is going to end up being 20 billion in automotive gross revenue, which is going to be massive. I mean, that's going to be almost a 4 billion increase from their best quarter Q1 of 2022. And then I'm projecting just a normal amount of regulatory credits, which will take them clearly over that 20 billion mark. And if that's the case, we're probably going to be looking at an automotive gross margin just above 30, which is not their best. It's not crazy compared to previous quarters. I don't think it will beat their best quarter, but I do think it's going to be substantially better than last quarter because they just lost so much operating leverage from the Shanghai factory being shut down. The second big upside surprise that I think we're going to see in Q2 is an increase in non-automotive revenue and profit. And this is going to come from a number of different things. This is going to come from energy. This is going to come from superchargers, insurance, resales of lease vehicles. And I'm going to break down where I'm seeing this and where I think this could benefit Tesla. So if we go to the energy section here in my financial summary, we can see that Tesla's had ups and downs in energy. Okay, they had 806 million in revenue in Q3. Then that went down to 688, down to 616. And then last quarter, it picked back up at 866. And I'm projecting that this will be the first quarter that they break through the 1 billion threshold. And the reason is Tesla executive Martin Viecha was recently interviewed, and he said that this is the first time that Tesla is no longer battery constrained. And he said it's for both of their divisions. And so that to me implies that he's talking about automotive and he's talking about energy, and that this is the first time that they are not battery or supply constrained as it relates to the energy business, because that's the only thing holding them back. When it comes to things like power walls and mega packs, which are the main drivers of the energy side of the business, those products are pretty simple. They don't require the same amount of detailed manufacturing that their cars do. But the problem is they're often prioritizing the batteries into the vehicles, and then the storage, the power walls and the mega packs, they get any excess batteries that are out there. And so him saying the batteries are no longer a constraint on this side of the business tells me that this is going to be a really good quarter for energy. Then when it comes to profitability, the line below, we can see, again, Tesla has struggled with profitability with this sector. And last quarter, they had 97 million in profitability. So I'm expecting that it's going to go up again in this quarter. And I just put 140 million in that section, but I believe that it will probably be that or more. And more importantly, this part of the business is now contributing to profit as opposed to holding back profit. And I think that's the most important thing, because it's still an automotive company first and foremost. We know all of other things that Tesla can do, but when it comes to present day numbers, it still heavily relies on automotive. So anywhere that they can get little contributions from energy or services is amazing. And so let's talk about that next category, services. This is actually often ignored. And I think it's because a lot of people don't really understand all the things that fall into services and other revenue. And so for Tesla, it's things like insurance, it's things like supercharging, and it's things like lease resales all get thrown into this category. And this to me is really impressive. If you look at their quarterly growth, it goes from 894 million to 1.06 billion to 1.28 billion to 1.46 billion. It is steadily climbing quarter after quarter. It's averaging 15 to 20% growth quarter over quarter on this side of the business. And we went from similar ups and downs as the energy profitability to a pretty considerable $56 million profit last quarter. So I expect that this part of the business is starting to hit its stride. It's starting to hit the exponential side of that growth curve, and it is about to take off. And so we're going to see 1.6, maybe 1.7 billion in revenue from this category. And we're going to see some substantial profitability that can really start to contribute to the bottom line. And real quick, I just want to show you where you can get this data on superchargers so you can see more specifically what Tesla's providing. Going back to that Q2 summary from their earnings, we can see that Tesla has been growing their supercharger stations. They have the actual current active total here listed of 3,971 from Q2. And then the connectors is climbing to 36,000. And so Tesla is steadily adding about 2 to 300 stations a quarter, which is adding about 2 to 3,000 connectors a quarter. And we don't have a lot of specifics on how much revenue each connector provides, but we do know as we go back to the summary that services is just climbing quarter after quarter. And I would imagine that supercharging is a big aspect of it. And then lease resales is going to be an interesting one this quarter because the used car market has been so hot. It's come down a little bit, but it's stayed pretty hot. And with that, you have a lot of cars that Tesla is getting off of lease. Their leases are ending, and they're able to sell those back into the market at whatever price the market desires. And so a lot of those cars are selling close to their initial sticker price, or they're potentially selling more than their original sticker price, which we've seen some cars do because of the current backlog. All of those things really should combine to contribute to a pretty big surprise in non-automotive revenues and profit. And then lastly, our third potential upside surprise is decreasing commodity prices and then other one-time expenses not being on this quarter. When we look at commodity prices, we can see from this cool chart that ARK Invest put together that a lot of commodities peaked earlier this year. A lot of their prices peaked in March or May or June or July, and they've actually come down pretty significantly from their all-time highs this year. We also know that oil has come way down. It peaked back in March. It had another smaller peak in June. But when we look at quarter three, which is July, August, and September, we can see that the prices have been down for most of that quarter, which is going to keep logistics costs down. It's going to keep a lot of the vehicle transportation costs lower. And so that should help Tesla's operating expenses. Elon even reiterated that in some tweets where he said more of their commodity costs are trending down rather than up. And that was a few months back. And so he's warned more about deflation rather than inflation, at least as it relates to Tesla's supply chain and the things that they're purchasing. Also, there's a lot of one-time expenses that have shown up in previous quarters that seem very unlikely for this quarter. So those are things like a Bitcoin impairment or an Elon Musk compensation package. These are things that have had pretty big impacts, negative impacts on previous quarters, even though Tesla has set so many records in previous quarters. There's these things that have been hiding in there. And so Q4 of 2021 is when Elon Musk had his massive compensation package. It was 500 million in that Q4 2021. And you can see with that 2.2 billion number as compared to 1.6, 1.8 in nearby quarters, that it did have a significant impact. And that was from some options that he exercised and taxes that Tesla had to pay from that big payout to Elon. In other quarters, we've seen things like Bitcoin impairments that have hurt the business, and there's none of that we can foresee in this part of the business. And so a lot of their costs are coming down, and we're expecting operating expenses to go up a little bit because they're ramping up factories. But we also had those same factories in Q2, and we didn't see a high operating expense. The one thing we did have in Q2, though, even with that smaller number, is we had 140 million that was paid out as compensation to employees that were either fired or laid off during that time. That fell under restructuring costs. And that's because Tesla did some layoffs. They did a big ordeal about people working in office and not from home. And so there was that one-time expense in Q2. And so I'm projecting that operating expenses will likely go up this quarter, even without any of those expenses, because you never know what will come. But I assume that the increase in revenue, the increase in average selling price, and the increase in the non-automotive revenues like energy and services is going to more than make up for a potential increase in operating expenses. And so let's go down to the bottom and just talk about how this could potentially affect the earnings per share and the stock price real quick. If we look at the earnings per share at the bottom, we can see the GAAP earnings per share from the 4 previous quarters of 48 cents. This is post split up to 65 cents. Below that, I created a running tally of the previous 4 quarters worth of earnings. And so this creates a trailing 12 months PE ratio, or allows us to create a trailing 12 months PE ratio. And so we can see that as of Q2 2022, if we added up the previous 4 quarters, we get 2.76 in earnings per share, which if we want to use a stock price multiple of 75, that would be a price to earnings ratio of 75. We're looking at a potential bottom of 207, which is what we've basically seen in the markets over the last week. If we go ahead to Q3 here, analysts are projecting 1.03 in earnings for Tesla. And so if that happens, that basically will eliminate that Q3 2021 number of 0.48. And so that will automatically have a positive increase on the trailing 12 months worth of earnings, putting that to 3.31. And now if we take the same potential PE ratio of 75, now we're looking at a stock price of 248 at that same PE. If we were to see something more like 1.1 or 1.2, you can see how this affects that potential stock price at the same 75 multiple. And so we could look at maybe a 1.2 beat on earnings. And then now we're looking at a stock price of 261 at that same 75 PE. And my belief is that if that's the case, if Tesla does beat in that way, then it definitely justifies more than a 75 PE. I think they've earned more than that by their growth rate. Even without that, this is not financial advice. It's just my own opinion. But the reason I'm providing these numbers is not to say that Tesla's PE should be this or that. It's more for me to just have this point of reference, this knowledge that as we add a positive quarter, whether it's a record or not, and it washes out a quarter that we were completely in a different stratosphere, it doesn't really matter how big that quarter is because of the quarter it is eliminating from 4 quarters ago. It has a pretty big effect on the prior 12 months earnings, and therefore can have a pretty big effect on the PE ratio and potential stock price. But I hope you guys found this video helpful. I do these just as much for you as I do for me. I hope you guys like this summary where I've tried to simplify some of the key financial metrics for Tesla. But again, I think we're going to be in for an exciting Q3 announcement here. I think the average selling prices, the increase in non-automotive revenues, and some of these one-time costs and commodity prices coming down is going to lead to a pretty significant beat here. So if you enjoyed today's video, please like, subscribe, share the video, comment below what you found to be most valuable, and thank you for watching.